To put this all in context, we're joined now by Scott Gamm. He's an analyst with TheStreet.com. So, Scott, why is the Dow at an all-time high with a lot of uncertainty surrounding the new U.S. president?
Well, there's a lot of enthusiasm surrounding the new U.S. president, right? We're hoping for tax cuts, infrastructure spending, even Trump's recent executive orders to approve the Keystone Pipeline that has led to a rally in material stocks. You're seeing those stocks higher. And of course, this Dow 20,000 is a very symbolic moment. We've been waiting for it to happen for quite a few weeks now, and back on January 6th, the Dow came within a point of reaching 20,000, but never made it. It retreated over the past few weeks, and then here we are on this Wednesday at Dow 20,000. And, you know, one thing to keep in mind is that people who don't normally follow the markets are going to now see all these headlines about Dow 20,000, and it might encourage them to get into the markets, put capital to work, and that could push us higher in itself.
Well, let's step back a moment. What really led to this? Is this something that was in the works for months, or is this really the Trump effect?
Well, I think a combination of both. I mean, look, we've had a bull market now since 2009. I mean, the Dow hit its low back in March of 2009, and it's been, you know, higher ever since. And just a year ago, the Dow was at 15,600 in February of 2016. So now we're at 20,000. That's a 28% upside. So the markets chugged along, and then we had the election of Donald Trump, of course, in November, and we had the so-called Trump rally. After that, we saw financial stocks rally on the hopes of deregulation. We saw energy stocks move higher, largely because of hopes that Trump would also cut energy regulations, but also we saw an OPEC deal in December to cut production. And then the rally kind of fizzled out in mid-December. Up until now, you saw the sectors that shine the most after the election actually decline the most over the past month. And that obviously rebounded, and here we are at Dow 20,000.
So what would this mean for the average investor, the average person looking at this? Do you expect to see more people jump in? Could we see it go back under 20,000 and stay under 20,000? What are your thoughts?
Oh, look, we could totally see it move, you know, down below 20,000. But, you know, I think people will move money into the markets. This is a very symbolic moment. People will read the headlines. People who don't normally follow the markets. This is now a general news story versus something that only the financial press talks about. So that's another key point here. You know, and I think for investors, you know, look, it's still just a number. You know, we could see a lot of volatility in the coming months. Like you mentioned at the top of the segment, there is still uncertainty about the new president, even though there is enthusiasm. So the market largely right now wants clarity on Trump's policies. This market is driven by clarity. So as soon as we get more details on Trump's policies, and it's only been less than a week that he's been in office, you know, the market will react to that.
That being said, Scott, you know, markets here in the U.S. going to close here in just a bit, and in just a few hours, we'll see Asia open up. What sort of effect do you see happening around the world? Do you see more momentum?
Well, look, this Dow 20,000 mark is a huge relief for the markets. Like I mentioned, we've been waiting for this moment to happen for weeks. If you recall back in the final weeks of December, there were many trading sessions where the Dow would creep right up to near 20,000 and then stay there, and then it would retreat. And then back on January 6th, it came about 0.4 points away from hitting 20,000, and then it moved back lower. So I think investors knew in the back of their mind that this would eventually happen, but they wanted to get it over with. And now we can finally move on to Dow 2100.
And moving on. Really, there seems to be some excitement surrounding this, the mood there in New York, I'm sure. You mentioned it could continue to climb or it could drop back under 20,000, but could this also mean that there's a bigger downfall ahead?
Well, look, it depends how you slice it. I mean, yes, many analysts are saying that the bull market we've been seeing over the past, 8 years is getting a little long. And, historically, it's not the longest recovery we've seen, but it is up there in terms of the length and the number of months of the recovery. So that's one way of looking at it. But the other way of looking at it is that, hey, we now have a president who may put forth a huge fiscal spend. That's something that the Federal Reserve had wanted the government to do for years, just to give them a little bit less pressure for them to have to step in and keep interest rates low. So we could get a fiscal spend there, and then tax cuts. If we get tax cuts, the consumer might be able to spend more money. That's also good for consumer discretionary stocks. And so you have many forces that are pointing to more bullish sentiment in the coming months.
All right, Scott Gamm, TheStreet.com. Thanks for joining us from New York.
Thank you.